Hi friends, once again welcome back to Roji's Share Tips. Today we look at the Infosys share price analysis. Before we go into the analysis, let's look at the quarter 2 results came just right now. Here you can see the net profit has jumped from 4,858 in the previous year same quarter to 5,428 this year same quarter. Also, if you look at the previous quarter, that is quarter 1 2021, you can see it is 5201 and you can see it has moved to 5428 this quarter. So there is a increase, there is a solid increase right now. And if you look at the earnings per share, it has moved from 12.88 from 11.42. Dividend the company has also announced a dividend of 15 rupees in this quarter. That means it is 100% sure that this share is going to fly up to 1800, then it may continue its rally up to 2000, possibly within a month or two. Okay, finally we enter into the share analysis. The business model is IT, BPO, that is business process outsourcing and next generation digital services. The business model has a very good growth potential considering the future requirements and demands. The market cap of the company is 7,17,720 crores, which is a gigantic company and it is a large cap stock. The company is firmly established in the market. The second largest IT company in India. The current market price is at 169017,700, which is 5% discounted price from its all-time high of 1788. Now the book value is 169, which is 10% of the share price. The face value of the share is around 5 rupees, which means a stock split is possible in 2 years, possibly. The dividend yield is 1.60%. That shows 160 rupees returns per year for every 10,000 rupees invested. The bonus history shows issued 8 bonuses and the last issue was in 2018 at the ratio of 1:1, which means holding this share for bonus is a good option. 12-month returns at 46%, which is really good. 5-year returns at 231%, which is great. Maximum returns from 22 years is 14,577%, which is absolutely amazing. Inventory turnover is not applicable for the stock. The earnings per share is 45.4, which is moderate. ROE is 27.2, ROCE 35.2, ROA 19.4, which is outstanding. Debt to equity is 0.7, which is very good. Debt to profit is 0.27, which is also good. Promoter holding is 12.95%, which looks very low. If you compare with other IT companies, this promoter holding is higher for all other companies. Only for Infosys you find this low promoter holding. This is surprising. Anyway, it is okay. DII is 33.39%, FII is 29.9% and has decent amount, means the company is still attractive for investors. Stock P is around 35.4, which looks slightly overvalued, but when you look at the industry average, it is 38.3, so it is okay. So you can buy the stock at this price also, it's okay. Consistent and growing profit in the last 11 years shows that company is in a proper trajectory. Company has a reserves of 69,749 crores, which has decreased from the previous year of 74,227 crores. Shows that some consolidation, some utilization of the reserves has been taken place. Still, even though the sufficient reserves are available to handle any kind of financial shocks. The cash flow is positive and we can also see a debt consolidation is going on fairly. That is good. Now CEO and Managing Director is Mr. Salil Parekh, age 57, got a BTech in Aeronautical Engineering from IIT Mumbai, Masters in Computer Science from Cornell University. Chairman of the company is Mr. N.R. Narayan Murthy. Even though he is Emirates Chairman, we could not find another chairman, so we are going with this person. He got a bachelor degree in Electrical Engineering from University of Mysore and he got a master degree from IIT Kanpur, which shows that company is handled by highly experienced and qualified personnel. Now if you look at the global presence, you can see the company is located in 30 countries, including US, Japan, India, Australia, etc. If you look at the subsidiaries, I found around 30 subsidiaries for Infosys, which is including Infosys, BPM, Panay, etc. Organization is headquartered in Bengaluru. The remuneration paid to the directors of 9-member panel is 53 crores. Shows that less than 0.25% of profit is taken as director salary. Shows that company is not mismanaged. The company founded in the year 1981. Now if we look at the Q1 2021 financial results, that is the previous quarter, you can see there is an increase of 7.2% compared to the quarter to quarter year on year. That is Q1 2020 and Q1 2021, there is 7.2% increase. Now, if you look at the Q1 2021 and Q4 2020, there is an increase of 2.3%, which is also looking very good, right? This year dividend of 15 rupees issued on May 2021, and everybody thought that dividends for this year is over. But along with the quarter 2 results, company has announced a second dividend of 15 rupees and ex date is 27 October 2021. You can also see that here a declared dividend of 15 rupees per equity share and fixed October 27, 2021 as a record date for interim dividend and November 10, 2021 as a payment date, which means you will receive the money only after November 10th. Moving to the technical part, you can see the 200 exponential moving average line, which is clearly below the price line. So the price looks bullish, the chart looks bullish. Now, if you look at the 4813 exponential moving average, you can see a neutral crossover which shows a short term consolidation, but after the results, this crossover has been invalidated and it is expected to go up sharply. If you look at MACD, you can see it is slightly positive. It is not a negative value, it is a positive value, and it is showing a short term consolidation, but after this Q2 results, I am expecting it to go up sharply. The stochastics, you can see it is undervalued, it is near the oversold zone, which means it have all the reasons to go up. RSI is perfectly neutral, which means it will support the other indicators. So overall, what I understand is the technical indicators shown here as well as the recent Q2 financial results, the price is expected to continue the bullish rally upwards. Now you can also see the same thing here. 200 EMA is bullish, 13 and 48 EMA is looking slightly bearish. Currently the price is somewhat okay for purchase. The MACD is just positive and neutral, best indicator for horizontally traded stocks. Expecting the uptrend to continue after today's Q2 financial results came positive today. That's it. Stochastics is slightly bearish and near the oversold zone. However, this oversold reason is going to push the share upwards. The RSI index is perfectly neutral, which means it will be following the other indicators. The price is expected to go firmly after the Q2 results came slightly above the expectation. Plus, surprise 15 rupees dividend announcement is also very positive today. Now, in my opinion, you must follow the buy on dip strategy. Support can be found at 1663, 1644, 1600 and 1562 levels. Opportunity is for short, medium and long term, all occasions. Opportunity is for short, medium and long term or for all occasions. Between 1600 and 1670 will be much better entry. Minimum and maximum long term portfolio allocation is 4% and 5% respectively, which means you can easily buy 2 to 3 quantity for a portfolio size of 1 lakh. Immediate target is 1800, medium term target is 2000 and long term target is up to 3000. If you like our video, please subscribe and like our channel, and thank you very much for watching.